Ray Dalio's warning for the economic crisis. Explained. Ray Dalio is one of the most influential investors in modern history. He's the founder of Bridgewater Associates, the world's largest hedge fund, and someone who's been studying debt cycles, interest rates, and global economics for over 50 years. When he speaks, markets listen. And right now, Dalio is issuing one of the most serious warnings of his career. In this video, we'll break down what Ray Dalio is saying about the next economic crisis, what signs he's watching, and what he believes is coming. Not just for the US, but for the world. Let's get started. Chapter 1. Who is Ray Dalio? Before we dive into the warning, let's quickly cover who Ray Dalio is and why his opinion matters. Ray Dalio founded Bridgewater Associates in 1975 from his apartment in New York. Over the next few decades, he built it into the most successful hedge fund in the world, managing over $150 billion in assets. He's the author of several best-selling books, including Principles, Big Debt Crises, and The Changing World Order, where he lays out the long-term patterns that shape the rise and fall of empires. Dalio's expertise, understanding economic cycles, monetary policy, and geopolitical risk, and how they all tie together. So when he issues a warning, it's not clickbait. It's based on data, history, and decades of experience. Chapter 2. Dalio's core warning. Dalio's main concern today is this: we are at the late stage of a major debt cycle, and that's when things usually break. Here's how he explains it. Over time, countries build up debt: government debt, corporate debt, and household debt. At first, this debt helps fuel growth, but eventually the debt becomes too large to manage. Interest payments rise, productivity slows. Governments are forced to either raise taxes, cut spending, or print more money. Dalio calls this the long-term debt cycle, and we're now near the end of one that's been building since World War II. According to Dalio, this creates the perfect conditions for currency devaluation, social unrest, political polarization, and global conflict. Sound familiar? Chapter 3. The Four Big Forces. Dalio believes four major forces are converging, and they're setting the stage for the next crisis. Let's break them down. 1. Too much debt and not enough growth. The U.S. government now has over $34 trillion in debt. Interest payments alone are skyrocketing. At the same time, productivity and real economic growth are slowing. Dalio warns this imbalance is unsustainable. 2. Internal conflict between the rich and poor. Dalio says wealth inequality is now at levels we haven't seen since the 1930s. This is creating deep political and social division, and it's making effective policymaking harder and harder. 3. External conflict between rising and declining powers. This one's huge. Dalio believes the US and China are on a collision course, not just economically, but geopolitically. This could lead to sanctions, trade wars, or even military tension. 4. Climate and technology shocks. Finally, Dalio points to unpredictable shocks, from AI to climate change, that can trigger volatility in fragile economic systems. When you combine these four forces, you don't get a normal recession. You get a system that's vulnerable to collapse. Chapter 4. What happens in a debt crisis? Dalio's book, Big Debt Crises, outlines the typical pattern of how debt-fueled economies break down. Here's how it usually plays out. 1. Debt builds up. Growth is artificially boosted by borrowing. 2. Interest rates rise. The central bank tries to cool inflation. 3. Payments become unmanageable. Borrowers struggle to repay. 4. Defaults increase. Credit tightens. Growth slows further. 5. The government prints money. Central banks start quantitative easing. 6. Currency weakens. Inflation rises. People lose trust in the system. Dalio believes the U.S. is already in stages 4 and 5. Defaults, stimulus, and now inflation. The next stage? Loss of confidence in the currency, which could lead to social unrest, capital flight, and the need for even more drastic policy intervention. Chapter 5. Is this just doom and gloom? You might be thinking, is Dalio just being alarmist? The truth is, Dalio's not predicting a sudden collapse. He's not saying the US will disappear or the dollar will vanish overnight. What he's saying is that we're entering a period of high volatility, major change, and potential crisis. And in times like these, people and governments are often forced to make painful decisions. Do we raise taxes or print more money? Do we cut entitlements or increase the debt ceiling? Do we protect the dollar or stimulate growth? These are not easy choices, and Dalio believes that most societies, when pushed, will choose inflation over austerity. That's what makes this crisis different and harder to fix. Chapter 6. What can you do about it? Dalio doesn't just sound the alarm, he also offers some guidance. Here are a few of his core recommendations. Diversify geographically. Don't rely on one country or one currency. Hold hard assets, things like gold, inflation-protected bonds, or real estate. Avoid too much leverage. In volatile times, debt becomes dangerous. Understand history, because we've been here before, in the 1930s, in the 1970s, and in other empires that collapsed. And finally, stay adaptable. In Dalio's words, the greatest mistake of all investors is to believe the future will look like the past. It won't. Final thoughts. Ray Dalio isn't your typical Wall Street analyst chasing clicks. He's a macro thinker who studies centuries of economic history, and his warning is clear. We are in the late stage of a long-term debt cycle. The combination of rising debt, global tensions, and internal division is creating a highly fragile system. Will it break? We don't know when or how. But Dalio's message is this: don't assume stability is permanent. Prepare now, before the cracks become a collapse. If you found this breakdown helpful, hit that like button and subscribe to Finance-Related 101 for more real-world economic deep dives. Comment below. Do you agree with Ray Dalio's warning, or do you think he's exaggerating? Let's talk about it. Thanks for watching.